anyways, so today at our roundtable, just wanted to discuss one of the things that both Samantha and myself have come up with over the last 7 to 14 days within a couple of our transactions. And realistically, it breaks down to trusting in the process as well as trusting the professionals that you've hired in the process, mainly AKA your realtor as well as your lender. One of the things that we would like to address today is your credit and not doing things that you shouldn't do, of which I know myself as well as Sam give you an entire packet when you start the buying process of what not to do when purchasing a home. So the education is definitely there on our behalf, and it comes back to the client themselves to follow the guidelines. I'm not going to say rules, but follow the guidelines within the home buying process. And the reason for that is we can make it as stress-free and simplistic and streamlined as possible, or we can generate hoops that create the stress and the inability sometimes to perform on a loan. So I guess I'll talk about my client first, and then I'll turn it over to Sam on her client, and
Claim.
and go from there. Sorry, we got bloopers in here too.
Woo-hoo.
Um, but anyway, long story short, my client had a credit issue come up for a late payment on one of their credit cards. And we do stress entirely within the home buying process that you maintain your current financials. And that doesn't mean go out and take on additional debt, open any more loans, anything like that. It's maintain. Because once we sign the documents and we have the close done, what you do after that, whether it's opening new credit cards, forgetting to pay a bill, whatever the case may be, that's not going to affect your purchase if you've already closed on the property. However, what that does do is right now in my client's situation, we are outsourcing, trying to find an additional investor to take on the file. And what that means is all the work we've put in for 6 weeks trying to get from point A to B kind of up in smoke. Because that investor is no longer going to finance the product. So trying to find something else, and the product is never going to be as good as the first product because you are a higher risk tolerance now as far as a borrower is concerned. Now, Sam's is a little bit different, and I'll let her tell you about that. But it's just food for thought to think about. You hire people to entrust your largest asset and or purchase that you're typically going to make at any given time. So following the guidelines, I guess, is where I would stress. Sam, what's yours got?
Yeah, so to kind of piggyback off of that, uh, we're definitely, I am not a lender. However, our lenders are our partners, and we do these roundtables with them. We chat with them, they text us, they update us. And so I feel like we know just a little bit when we're offering this guidance on, hey, you are a week away from closing on your home, your new home. Please don't go open a Nebraska Furniture Mart credit card because you want all the furniture to be delivered on closing day. No, it changes things. It changes your debt to income ratio. You think it's okay because, well, you've given all the paperwork, passed appraisal, and you think you're good, but you're not. Um, this happened on the forefront for my guy. He had heard through, and I'm not saying there's anything wrong with whatever platforms you use to get information, but he had heard on a social media platform that if you add yourself as a user or a co-borrower to someone's credit card, then you're going to boost your score. Theoretically, yes. However, the situations have to be ideal. And in order for those situations to be ideal, they have to have outstanding credit. The credit score has to be outstanding. They have to have low credit card utilization on that card, which right now the magic number is below 30%. And my buddy shot himself in the foot. He actually ended up going backwards in what he would be approved for and what if he was just on his own. Um, but unfortunately, he took on the liability of whomever, uh, whatever they're choosing in their financial life. And, stuff happens. Maybe this person was a strong primary to get added on to their card with, but life happens and that situation changed. So now we're trying to work in a reverse forward motion to undo some of what he's done, but now it's going to take time.
No, and
So,
it's all great, valuable information, and I agree with you. Time is the only thing that's going to fix any of this, but within that said time, there has to be guidance. And I think guidance is probably the key factor of again coming back and trusting within the people that you've hired to help you.
yeah, it's kind of like playing the um, Red Rover game. You know, we're holding hands and we have our partners that we know, like, and trust that are good, and we're all working together,
Yep. No, and I
So,
think that's probably the biggest caveat that most people miss within the real estate world is 99% of all transactions, from your lenders to your realtors to just whatever partner you have involved in the transaction, they do have the same goal to get you to the finish line and put you into your new home.
mm.
So nobody is working against you other than potentially yourself.
And then time if you do that to yourself.
Yes. Yep.
So we
No,
could avoid all that and just work, communicate.
yeah, communicate. So, starting moving forward, Sam and I are going to do a recording or a video based upon what our roundtable discussion is for the week, and we do it as a team. But we're definitely going to at least get a video out there to give you something to look forward to every week and something that will educate you within your home buying or potentially selling process to make your transition to your next home or property streamlined, stress free, and entrusting in Sam and me.